Hey Bowtie Nation, Joseph Hogue here, and stocks are not working this year, like clearly not working. The S&P and the Nasdaq both touched bear market territory, and even the old school names in the Dow plunged 15% to that June low. But investors still need income. Try calling up the electric company and just explaining to them that the payment is going to be late because stocks are down. You need a portfolio of other assets, income investments that will not only diversify some stock risks, but also produce that income with the ease of stock investing. In this video, I'll show you how to find alternative income investments that trade just like stocks. I'll show you what to look for and how to create a portfolio with as much as half the risk of stocks, then reveal 5 easy income investments to watch right now. We're getting started, but before we do, I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I want to thank today's video sponsor, Global X, a leading issuer of ETFs that allows investors to access a broad set of companies around the world with targeted exposure to different themes, income solutions, and international access across more than 90 exchange-traded funds. Global X provides some of the most popular ETFs targeting emerging trends like lithium battery tech and robotics, or the QYLD, Global X's NASDAQ 100 Covered Call ETF. The Global X research team publishes in-depth and accessible insights online to help investors make informed decisions about which funds you want to buy. These include expert perspectives on market conditions, as well as research into all the ETFs in the lineup, the themes, income funds, and international ETFs. If you want to learn more, Global X posts its insight research and products on the website at globalxetfs.com. You can also sign up for email updates, including a weekly research note and other updates. So I'll leave a link to that site in the description below. Check that out. Our first income fund is the Global X Alternative Income ETF, ticker ALTY, a monthly dividend fund with a 6.75% yield and a 6-year history of payouts. The Alt Income Fund targets companies with a high yield potential and invests across 5 segments, including pipeline-owning MLPs, infrastructure, real estate, preferred shares, EM bonds, and covered call strategies. I'm going to explain how this helps your portfolio later, but basically we're looking at a fund that invests in a lot of real tangible assets that are going to hold up in inflation and when stocks crumble. The fund does own some individual stocks, but the majority of the assets, more than 80%, are in separate ETFs around those key income producing assets. Next here is the MLP and Energy Infrastructure ETF, ticker MLPX, with its 5.2% dividend yield and one of the few funds actually up this year. Now, master limited partnerships, or MLPs, own pipelines and storage facilities, but are less sensitive to the swings in oil prices because they charge companies fees to move their crude or natural gas through those assets. Now, another benefit of the MLPX is that it also invests in those infrastructure companies, so a little more diversification than you get with most MLPs. And since it is an ETF, an exchange-traded fund, you're not going to have to worry about getting that K1 tax form like you do with those individual MLP investments. A great way to get exposure to this real asset. We've still got 3 more income investments to highlight, but I know a lot of you are asking, why do I even need these kinds of alternative investments in my portfolio? And I could rehash the same stuff that you've heard 100 times about diversification, about how you need different assets to smooth out those risks in stocks, but if you've already heard it 100 times, then that 101st time, well, why don't I just show you? So take a look at the chart of all 5 income ETFs I'll highlight in the video. All 5 are beating the returns on the NASDAQ so far this year. And that's the NASDAQ in red with a 29% loss so far. And I should have added the S&P 500 because it's also down more than 20% as well. 4 of the income funds are down an average of 15%, about half the loss on that tech-heavy NASDAQ. And the MLP fund is actually up for the year, beating the market by more than 35%. But more importantly, look at a portfolio of all 5 ETFs. The blue line here is an equal weighted portfolio, so 20% in each of the 5 funds versus the NASDAQ index in orange. Not only has the portfolio of alternative income investments beaten the NASDAQ by a long shot, but it's done so on about half the volatility, as stocks in the NASDAQ jumped and crashed lower, taking your money and a good night's sleep with it. The portfolio of income assets was a smoother ride. In fact, the standard deviation, a measure of how volatile an investment or a portfolio is, that volatility for the portfolio is just 15% on an annualized basis, less than half the 34% volatility on the NASDAQ QQQ fund. So the point is, just do not underestimate the power of combining some of these types of alternative income investments into your portfolio to help you smooth out that stock market risk. This next income investment, the Global X Emerging Markets Bond ETF, ticker EMBD, offers 2 levels of diversification from US stocks. First, as a bond investment, and also as an international component. Now, with the rise in rates, bonds haven't provided that traditional safety from a stock crash this year, but rates have leveled off recently, and I think most of the pain is already priced in for bond funds. With that EMBD, you get a 5.3% dividend yield paid out on a monthly schedule and exposure to completely different parts of the capital markets. The fund has approximately 58% of its assets in safer government bonds in emerging markets, along with 32% in corporate debt and an average yield to maturity of 6.75% on the portfolio. The Global X Super Dividend REIT, ticker SRET, is our highest dividend yield of the group with a 7.1% yield. The fund invests in 30 of the highest yielding REITs in the world, so not only do you get that exposure to real assets like real estate, but also the international diversification. The Super Dividend ETF has a 7-year history of paying out monthly dividends for that income investment theme and holds some of my favorite real estate investment trusts like WP Carey and Gaming and Leisure Properties, ticker GLPI. Now, all you out there in the nation know I'm not just trying to drop a list of income investments in your lap and say go buy these. I want to show you what I'm looking for in these, how to find your own income funds, and how you can do this on your own. Here, what I'm looking for is assets and investments outside of stocks. So one is those investments backed by real things like MLPs at their pipelines, a real estate investment trust, and infrastructure deals. I'm also looking for investments that may be like stocks but have those other characteristics that are going to lower those risks, like preferred shares and options-hedged investments. Now, looking for these in an exchange-traded fund, an ETF, means you can buy or sell any of these just as easily as any stock. You don't need tens of thousands of dollars for a down payment on real estate or accredited investor status that gets you into the private equity deals. That's the power of these alternative income ETFs. We'll get back to our list of income investments and one of my favorite funds next, but I want to get your opinion on this as well. What income ETFs do you think should have made the list? Now, I've tried to find funds across alternative assets ideas, but what did I miss? So scroll down and let me know in the comments below. The Global X Variable Rate Preferred ETF, ticker PFFE, is another interesting option you don't hear about much and offers a 6.2% dividend yield. Preferred shares are a special type of stock with rights that go beyond the normal shares. Preferred shares have a set dividend yield, and the payment must be made before regular stockholders get any of their dividends. These investments usually offer a much higher dividend as well. For example, Bank of America issues preferred shares paying between 6 to 7% dividends, while its common stock pays a dividend yield under 3%. Preferred shares are also higher up on that list of liquidation, so if a company does file for bankruptcy, preferred shareholders get paid before common stockholders, but after creditors. Best of all, though, is that preferred shares enjoy some of the growth benefits of regular stocks. Most preferred shares are convertible into regular stock if the share price reaches a certain point. Basically, the company is saying, here, enjoy this high dividend yield if the stock price goes nowhere, and a potentially higher return if their shares take off. As a variable rate fund, the Global X ETF benefits on that rate reset as interest rates rise and offer one of the lowest expense ratios in this class of fund. Now, the fund invests across preferred shares, mostly in financials, but that's just the sector that is most likely to issue these kinds of investments. Click on the video to the right for a comparison of the best income ETFs, a side-by-side to funds like the QYLD, JEPI, and RYLD, and which is the best for your money. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.